So, as I was wrapping up the week, I was looking back at our client conversations and how our team was doing in terms of preparing, um, returns and different things for clients. And this theme of patterns of different things came up around tax preparation and tax mistakes that have come up. And I wanted to give today an extra live for the week to really, really talk about it. It's been a theme across the years that I've seen. And then this client big project that I've been working on across multiple entities and multiple years, it keeps screaming a lot of the same things that I am going to share today. And it's a lot of things that business owners don't realize. And the biggest mistake, it's not that it only shows up with a larger tax bill, and sometimes it does. And often the cost is much bigger than that. It's the real cost is the opportunity, and it's the opportunity to invest into things. It's also the possibility and the opportunity to be able to pay your bills at a much more peaceful and calm way. And you could acquire other businesses, you can buy another property, but building wealth. And many people think it's just about the tax bill. It's not. And they think it's just about the compliance, and it's not. And it's really more about the wealth. Now, I remember when I was starting this, there was a bridge in my career when I was at the crossroad of LLC to S Corp and really shifting the way I operate. And it comes with significant costs. I also couldn't see saving for taxes, paying bills all at the same time, owning assets in good condition. And through just the power of the beauty of the tax law, did things happen for me just one by one. Letting the structure of the tax law and the system run how things go, it alleviated also decisions of what I had to do. And many business owners ask this question, ask many of these questions, but not limited to is how much tax do I owe? How do I lower my tax bill? And they're reasonable questions, but they're not the most important ones. The question I believe that most owners need to be making is what impact is my tax strategy having on my future wealth? Because every dollar unnecessarily lost in taxes is really the opportunity that's no longer working for you. So, because we're not paying attention to tax law, the compliance, the opportunity, the options, the possibilities, it's lost money because we can't stand in it. And I remember that for myself and feeling it that day when the bill came and it had to get paid. And it took me at the time for more than what I had plus. And it took me months to recover. But it was something that I said I never want again for myself, for my clients. And it was part of how my mission began in terms of really helping tax law and for clients. And what happens is that we are losing what we can invest. We're losing growth by what we already made. And it doesn't create future opportunities, right? So over time, that compounds. So ever hear about what's noisy is like what you really have to keep paying attention to? And when I see behind the scenes is one of the things that I love most about being a CFO is really getting behind the curtain. And I get to see what's actually happening inside the business. And I see over and over again that many business owners, they're working just really incredibly hard, every single one and more. And the revenue is growing. The business looks successful from the outside, but nobody ever helped them correct the dots between the planning and the wealth creation. Now, when I did this for myself, my life in terms of wealth and money and all of these things and assets was much less complicated. However, it stayed with me so that the other things could happen. So it's basically like a template, a structure, an architecture of structure that you just keep curating as you go. So there becomes no question of how or should or cash flow, because it has to fit into the entity and what the beauty of the law really is. And because nobody connected the dots, then filing the tax returns become a fire. And nobody really built you a strategy. And there's a huge difference between those two things. And the tax return tells us what happened, but the strategy influences what happens next. And the cost of the mistakes and is really unimaginable. And imagine two business owners, both are earning an extra $100,000, okay? And one has proactive planning and one doesn't. Most people think the difference is simply the amount of tax paid, but I see it really different. The difference is what happens to the money that stays in the business owner's pocket throughout the time, because it becomes a down payment for another property, a new hire, an investment account, retirement, marketing generates more opportunities. Cash reserves create peace of mind, so that vacation that you want to go, the family and things, or pay for education, put away for education. The tax itself always isn't the biggest cost. The opportunity is the cost around taxes. So here are the mistakes that I see often, and there's about 4 of them. The first one is just waiting until tax season. This has to stop. You're listening to my live, and we're just here. Let's just make this internal agreement. Let's stop. And many business owners think that waiting is okay, but the decisions are already made for you. And the planning season is not in the tax season, it's all the time before. It's year round is when the leadership activity really is. The biggest opportunities are usually not identified before year end, they're really after. And the second one is having a tax preparer, but not having tax strategy. And the tax preparer is incredibly important. But preparing the return is building on a strategy are really two different things. One looks backward and one looks forward. And the business owners who create the most wealth tend to spend time in the planning ahead and not simply documenting the past, because the catch up just continues to catch up and catch up and catch up, and it really doesn't ever catch up. And the third one is reevaluating entity structure. What worked when your business was doing 300,000 a year is not going to be the same for 3 million. It's just not. Businesses evolve, revenue evolves, complexity evolves. Complexity is just what evolves. Your structure should evolve too. It doesn't mean because you can't keep up cash flow that that's going to change what the tax law is really saying. What's happening in your business needs to change. It's your choice not going with tax law. It's really taking an opportunity that is yours and saying, I don't know if I could, I don't know if I want to spend the money. So you're consciously deciding. Yet many owners really keep the same structure for years, and it doesn't really support you. So you think you're making more money, but you're just making more of a mess. Number 4, the last one, but not limited, is doing things without understanding the impact. And I see this way too often, and probably like all of the time. Business owners make a large purchase, taxes, they take a distribution, they acquire a property, and they're like, oh, my person's going to take care of it. We're going to do this. We're going to do that. They start a new company, they make an investment, and those decisions can have long-term effects for far beyond the current year. And I have a client who was telling me they couldn't do something because the distribution level was minimum 250,000. And I'm like, so where'd you get that from? And he's like, it's what I put in the board of directors. Like, he just totally made it up. And there was other things that had to happen besides this minimum that really, it was irrelevant. And it was just something he decided he wanted. But the structure of the entities and what the process really needed, it was clashing. And what wealthy business owners think about differently is that I noticed over the years, they don't simply ask, how do I reduce my taxes? What they're really asking is, how do I keep keeping more of what I'm building? That shifts everything, that change, keeping more of everything. Because now we're talking about cash flow, we're talking about growth, we're talking about investment, acquisitions, future opportunities, wealth creation. Tax strategy becomes part of a larger financial strategy. It's really, really beautiful. And that's what makes the magic really, really happen. And it's changed my life from thinking that, oh my God, the tax bill, oh my God, this bill, and whatever it is. But honestly, it is the best thing that ever happened to me and my kids, because as a single woman, I would never have been able to do it if I didn't know the law. And the law is always a protection to lead instead of us being in our own dang it way. Over the years, I've worked with owners of all sorts in real estate and in the mental health field. And the people that create the most long term success are not the ones looking for shortcuts. They're the people who understand the numbers, make decisions, and they plan ahead and stay curious. And even if you haven't been, this is something, a shift that's available for you. And I want to invite you in and help you along the way. And organizing your financial decision has a ripple effect because it's far beyond today. And it's really just what building wealth actually looks like. It's not necessarily you need separately a financial planner to sit down and make all of this happen. Without these building blocks, you building with a financial planner is like building on an empty land. So if there's one thing I want you to remember from today, it's that the mistakes are rarely tax. It's the missed opportunities, and it's the opportunities that you can pursue here and together today. And the investment you didn't make, the wealth you didn't get a chance to build, but the goal isn't to pay less tax. The goal is to keep more of what you're building so that the wealth is created ahead. If I stopped working today, I have a plan. I have some medical things that I'm going to take care of shortly, and I have a plan because I want to be able to do it, but I want my business to continue too. And there's so much that could still happen, even though I need to take a little bit of time off and pay for those expenses and still have my assets in good standing. But of course, my precious clients and following mean to me the world. So I'm curious, when you think about taxes, are you thinking about compliance or do you think about wealth creation? Be honest with me. Drop it in the comments below. And even if you had a different strategic review or tax structure, you're planning opportunities, send me the word wealth. Comment the word wealth below and let's have a conversation. So wherever you are with this, let's start the conversation. Let's normalize this and let's make this more happen. And if you have a fellow friend that can use this video and to tag into the conversation would be great. And if you never had a review on your tax structure, or you did and you're not happy and you're planning opportunities and whether your current approach is actually supporting you or not, send me the word wealth, just wherever you are. I want to help you in the right direction. So I am excited that you got to listen to this today. I'm excited the opportunity I got to share. And is there more mistakes that you think about in you being in the field and upon your experience? Excited to see you in the comments and the replies and the DMs. And I cannot wait to see you on our session together.